Welcome to the Green Zone Podcast, the show that teaches oil and gas executives how to take command of their finances and live in the green. Your host, Jeff Green, from Green Financial Group, will be your financial guide, all while giving you a tour of the most beloved and best-kept secret spots around Houston, Texas. Now, on to the show.
Welcome to the Green Zone with Jeff Green and Lauren Smith of Green Financial Group. I'm Patrice Sikora. The economy is expected to take a hit as we deal with the impact of the coronavirus. And in Washington, there have been efforts to mitigate some of that fallout. Those efforts include the CARES Act, which provides relief to several groups. Now, Jeff, I know we're talking that it helps supposedly aid with big corporations, small business owners, hospitals, education, but what does this mean for individuals?
Patrice, thank you. I do want to focus on the individual because it's mostly individuals that are listening to this podcast. And I want to preface it with two things. At first, we're not tax advisors, so make sure you get with your tax advisor when we talk about this, number one. Number two, I'm going to throw a bunch of numbers at you. It's going to get maybe a little mind-numbing, maybe even a little boring. I'm going to preface this in advance. If you want the numbers in writing, just contact us and we'll send you a printout of kind of what the numbers are. Just to preface that, if you get bored during the middle of this podcast listening to all these numbers, then just contact our office and we'll send it to you.
And before we go any further, what is that contact info?
The phone number to Green Financial Group is 713-244-3030, or you can contact us online at www.greenfinancialgrp.com.
All right, let's take it now. We're talking about the individual in the CARES Act.
Several things. We're going to hit on the big stuff here, really, for individuals. The first is the recovery rebates. That's the check that we all hear about that the government's going to send us. And so here's the deal with that. It's estimated to reach about over 90% of taxpayers, number one, and it's provided as a refundable tax credit. So that's going to be something you talk to your CPA about. I don't want to get into a lot of that, but make sure you talk to your CPA about that. Here are the numbers. $1,200 for individuals, $2,400 for married couples, and an additional $500 per child under the age of 17.
But there's a cap on that, isn't there? Earnings cap?
Glad you asked. So it phases out based on income, AGI, adjusted gross income. This is based on your 2019 filings. And now there's, again, you're going to have to get with your CPA on this, but let's say you haven't filed your 2019 returns yet. Mm-hmm. And your 2019 returns look lower, which is good in this case, than your 2018 returns. Then you might want to speed up your 2019 filings if they're lower than your 2018 filings. So keep that in mind. Now, here's the numbers as it phases out. For married couples filing jointly, it's $150,000, up to $150,000. For filing head of household, it's $112,500. And for all other filers, like single filers, et cetera, it's $75,000. Now, the way it phases out at $5 per $100 of additional income. For example, if you're a married couple filing jointly and you make $150,100, then you'll get $5 less than the $2,400 that is
right. Okay.
attributable to married couples filing jointly. Does that make sense?
Yeah.
Okay. Again, you can, if your 2019 return is looking worse than your 2018 return and you haven't filed that 2019 return yet, you might want to consider, again, checking with your CPA. We are not tax advisors, but you're going to want to consider accelerating that filing.
But now, when are they going to start looking at these filings? I mean, by the time you get the 2019 in, is it going to be too late?
Great question. We don't have the answer to that.
Okay.
This is an evolving situation. It is a fluid situation, so we don't have the answers to many of these questions just yet. Mm-hmm. You don't know if they're going to look at that filing, that 2019 accelerated filing, or they're going to go back to the 18, how it's going to work just yet, or when that cutoff date is going to be. As of the taping of this, which is on April 9th. And again, this goes through a little bit of production process before it gets out there to the listeners. But on April 9th, that has not been determined yet. But the monies are to be paid as soon as possible. That we know that, but potentially that may not be until May. And just another heads up: Social Security recipients will receive those funds where they get their Social Security checks. Those that do direct deposits where they receive their 2019, 2018 refund, that's where they'll get their checks. Otherwise, the checks will be sent to the last known address on file.
And that is even if the Social Security benefits don't file their tax return, right?
That's correct. So if you got your the refund obviously is going to be based on a return, 18 or 19, depending on which is in there in the system so far. So based on that will be the number that you get, the amount of the check that you receive, and of course where you receive your Social Security checks and where you receive your direct deposit from your IRS filings or the last known address on file will be where you get the check.
So, Lauren, what else do we have here?
There's some coronavirus-related distributions that are a part of the CARES Act. And to benefit from these, there are a few stipulations that come along with that. You must have been diagnosed with COVID-19, had a spouse or a dependent that was diagnosed with COVID-19, experienced adverse financial consequences as a result of being quarantined, furloughed, laid off, or having your work hours reduced, or you have to have been unable to work because of lack of childcare, or own a business that closed or operated under reduced hours, or meet some other reason that the IRS determines is okay. Definitely a big list, but you do have to meet one of the items on this list to be able to qualify for the up to $100,000 distribution from either an IRA or an employer plan. So there's some things that come along with this $100,000 distribution. If you're under the age of 59 and a half, you are exempt from the 10% penalty that comes from taking money out of an IRA or an employer plan prior to that age. There's also no mandatory withholding if you're taking this $100,000 out of an employer plan. And you're also eligible to repay over the next 3 years. Effectively, this is a rollover back into your account. So you take, let's say, $50,000 out, and over the next 3 years, you can decide to put that $50,000 back into the IRA or the employer plan, therefore eliminating taxable consequences that would come with it. And then the final benefit of this is this distribution is still taxable if you keep the entire thing and don't roll it back over, but you are able to spread those taxes over the next 3 years. So you have the opportunity to get with your tax advisor and to decide, is it best to split it up evenly over the 3 years? Maybe 3 years from now is a lower tax year and you choose to pay the entire tax bill in 3 years. You have the ability and some flexibility of how you want to take that tax consequence. Definitely some interesting options that are out there.
Yeah, and I think some very good, potentially good financial planning opportunities with this as well. Yes, it's kind of a list of, can I do this? We understand through various sources that the IRS is considering, or the federal government is considering kind of doing away with those and just letting everyone, if we had our wishes, they'd just let everyone take the 100,000 out penalty free and give them the same options for rolling back in or paying taxes over a 3-year period. It offers some good financial planning opportunities, which, talk with your financial advisor if you want to learn about some of those things.
All right, so you still have that 3-year window that you have to look at, though, right?
Correct. That's going to be there for you.
Right. Okay.
The last thing, Patrice, I want to hit on, and again, there's more to the CARES Act than what we're talking about here. We have limited time, and I just want to hit on 3 big ones. That's the check that's coming to you. That's the $100,000 distribution that's potentially available to you, and the next is the big one, and the last one I want to talk about really is RMDs. That's RMDs, required minimum distribution. So a lot of stuff going on here with RMDs. The RMD, the required minimum distribution age, was raised this year to
72 now versus 70 and a half, which it was previously.
Okay. So previously it was 70 and a half. So in 2020, now it's 72. You can suspend your required minimum distribution for 2020. And that includes IRAs, employee retirement plans, 403Bs, 457Bs, et cetera. So your first timer, so if you're a first time RMD, taking your first RMD, not only you get to suspend it for 19 and 2020 as well. For people that don't need to take the distribution, that's kind of a big deal for them.
That is huge, actually. Yes. That 2 years you're talking about, right?
Yeah. It also suspends taken from stretch IRAs as well. So like an inherited IRA. And if you're doing the stretch IRA, there's like a 5-year rule. So the 5-year rule, and again, get with your advisor about this. We don't have time to go into great detail, but that's suspended for 2020. So if you're starting your distributions and you're within the 5-year rule, it now becomes a 6-year rule for you.
Okay. You were talking about the tax returns of 2019 versus 2018, 2019 rather. The filing deadline's been extended, has it not, for 2019?
Yeah, you're extended now. That's automatic for everybody until July 15th.
All right. How about enhancements to loans from employer plans? Are they impacted here?
Yes, the maximum amount of a loan from an employer plan that you can take has now increased from $50,000 to $100,000. And also 100% of your vested balance may be used. And payments on a plan loan otherwise owed may be delayed up to a year. So, definitely some benefits there as well.
So again, you should talk to your financial planner here.
Yeah, talk to your advisor. If you don't have an advisor, obviously, we're obviously welcome to speak with you or happy to speak with you, and talk with your tax advisor on a lot of this as well, because this transcends just financial planning and gets into some tax implications. I want to stress again, we're not tax advisors. That you need to contact your CPA for some of these issues. The thing I want to leave you with here, Patrice, is that there's some good things coming out of this. People see it as this is free money. No, it's not free money. It's your money. The government the government only gets money from one place. That's the people. So it's our money. And what the government is trying to do is, again, stimulate the economy, because the longer that this economy, the government mandated shutdown of our economy lasts, the longer that lasts, the longer the recovery is going to take. I'll hit on that for just a second. And this is what I've been sharing with clients. Had we been able to open and these are just guesstimates. I've shared this with clients, and I do some video blogs as well. I've shared that I'm going to share that here as well. If we had opened by Easter, which obviously is not going to happen, guesstimates, we would guesstimate that about 97% of our economy would come back online. If we open by the end of April, we're looking at about maybe 94%. End of May, maybe about 87%. And then if you go to the end of June, you're looking at about maybe 75% of our economy, but coming back online. So I liken it to a muscle atrophy. The longer, that muscle sits without movement, the atrophy sets in, and the longer it takes to recover. The same thing is true with our economy. The longer it sits dormant, the longer it's going to take to recover. So we're hopeful that we can get things going by the end of April. I'm hopeful of that, although you're hearing rumblings into May now. So who knows? I don't know. But I do know that the longer that the government makes this economy stay shut down, the longer it's going to take to recover.
All right, Jeff, how can someone get in touch with you and Lauren?
Absolutely. You can call us at 713-244-3030. That's 713-244-3030. We also have our website, of course, at Green Financial GRP. That's short for group. So greenfinancialgrp.com.
Jeff and Lauren of the Green Financial Group. To subscribe to the Green Zone, use the subscribe button on this page. You can also share with the share button. I'm Patrice Sikora, and let's talk again later.
Thank you for listening to the Green Zone podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views and opinions of Green Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors, Inc. Green Financial Group is not a registered broker-dealer and is independent of Raymond James Financial Services. Jeff Green is the founder of Green Financial Group and is a registered principal of RJFS. The Green Financial Group is located at 6363 Woodway Drive, Suite 625, Houston, Texas 77057, and can be reached at 713-244-3030. Raymond James is not affiliated with and does not endorse the opinions or services of his guests.